Ladies and gentlemen, good day and welcome to the Q2FY22 earnings conference call of Mahindra Lifespace Developers Limited. We have with us on the call Mr. Arvind Subramanian, Managing Director and Chief Executive Officer, Mr. Vimal Agarwal, Chief Financial Officer, and Mr. Sumit Kasat, Head Investor Relations. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Arvind Subramanian, Managing Director and Chief Executive Officer. Thank you, and over to you, sir.
Thank you, Margaret. Thank you everyone for joining the call. Good morning and welcome to our Q2FY22 earnings call. As you all know, many of our key operating entities in the residential business, like Mahindra Homes and Mahindra Happinest, and all the entities in the industrial parks business, are not consolidated on a line-by-line basis, and I'd request you to bear that in mind as you look at the financial statements. I wanted to start with a little bit of how we are seeing the demand trends in the two segments we operate in, the residential and the industrial business, and then talk about highlights of the quarter gone by in terms of our performance. On the residential business, we see 5 factors driving the strong demand that we are all seeing. One, there's clearly still some pent-up demand from prior quarters when the activity levels were low, that is still coming through as we speak. But equally, that pent-up demand, which is kind of a short-term trend, is also getting boosted up by a changing preference. And we've talked about this in prior conversations where our research as well as our conversations with customers who are coming and visiting us is clearly indicating that families through the lockdown period have realized that they're living with some compromises which they'd now like to alleviate, whether it is bigger apartments, whether it is nuclearization, whether it's better amenities or better managed development. So all of those are giving me a lot more confidence about the mid to long-term demand in the residential segment. The third aspect is affordability, with mortgage rates at an all-time low. That has boosted affordability. Combine that with the fact that household savings have clearly increased over the last year and a half, with less discretionary spends, less spends on things like holiday travel, entertainment, etc., which has boosted household savings. And finally, a supply side consolidation, which is again very clearly visible across all the major markets. These are the factors that are playing into very strong demand. We are seeing this across price segments, across geographies in our portfolio, and also as we look at the peer group and others in the industry, this is a trend that is very clearly visible. Turning a glance to the industrial parks business, again there we are seeing, and we've been talking about this for the past year at least, a very strong shift in geopolitics, which is favoring countries like India as a manufacturing destination. And the central government in particular, but also many of the state governments have now come to the party with very favorable manufacturing investment incentives. So the Atmanirbhar Bharat scheme, the PLI schemes that have been announced have also been backed up by state-level incentive programs on sectors like renewables, like electronics, etc., which is auguring well for demand in the industrial business. But interestingly, and this was a comment that one of the participants at the last CI National Council meeting made, which I found very telling. If you look at the trifecta of demand growth, pretty much across categories, all consumer categories are reporting demand growth, high capacity utilizations in most manufacturing plants, and low credit costs, low cost of debt. That combination suggests that over the next few years, there just has to be an increase in manufacturing investment. It's almost inevitable. And that, again, from a mid to long-term perspective, is a wonderful tailwind for us to ride on. If I look at the quarter gone by, I think these trends have clearly played out in our operating performance. On the residential business, we've achieved quarterly sales of just over 300 crores, so 303 crores. And this is in what is typically a seasonally weak quarter. Q2, particularly for Mumbai real estate, tends to be a seasonally weak quarter because of monsoon. And the fact that we've been able to show almost 100% growth, and many others have as well, tells you that there is a very strong demand trend. During the quarter, we had a good mix of sales in both our mid-market housing, in our premium residential developments, as well as in our value homes. We had a new launch in Mahindra World City, Chennai, where we launched a Mahindra Happiness project, which has received stupendous response. 348 units launched, and as of yesterday, we had sold more than 300. So 80% of the inventory, 80% plus of the inventory sold in 2 months of launch. Particularly for the Chennai market, that is quite historic, and I'd compliment our marketing and our sales teams for that achievement. Looking ahead, H2, we have a slew of launches planned. In Q3, we should be having our Bangalore project on Kanakpura Road coming to market. We are also expecting the RERA approvals for launching the third tower at Luminaire in Gurgaon, and we will be bringing a villa project in Alibag to market as well. And in Q4, we expect to be bringing our second Kalyan project, the land that we had acquired in March of this year. We should be in a position to launch that in Q4. So we have good launches planned in all our key micro markets in H2. Land, I know this is something that's been on all of your minds. Many of you have been nudging me even between these two investor calls that we've had. We continue to build very strongly towards the target that we had set out, which was to add about 2,000 crores of GDV year on year for the next couple of years, which will set us up well for the midterm, the first set of goals that we have for 2025. We've concluded one deal in the western suburbs of Mumbai in Dahisar, which is about 5 lakh square feet. It's a joint development project. It's again something that many of you have been asking whether we will be pursuing joint developments. I'm very excited about that project. Further down in the pipeline, deals that are in advanced negotiations. Two kinds of deals that I would like to highlight. We continue to look at some attractive outright transactions in both Mumbai and Pune, but also have some interesting society redevelopment transactions that are in advanced stages of negotiations. One of the operational disciplines that we have been focused on is how do we keep sales ahead of construction activity. So we want our pre-sales to be leading construction on a particular project, and we want collections to be in lockstep with sales. And I'm happy to note that we are tracking with that. We've had a strong quarter from a collections perspective as well, not just from a sales perspective. And we will continue to maintain that discipline because I think that sets us up well for driving the cash cycle of the business, which drives IRR, which I've mentioned in the past is the key metric that we focus on in the residential business. Completions we got our OC for Tower C at Luminaire, which was about 4 lakh square feet, and we are expecting many phase-wise completions over H2 in both Mumbai and Pune. The IC and IC business is also hitting its stride, and that's giving me a lot of confidence. I've been talking about this on the past several calls that inquiries were building up nicely, but conversions were a challenge because travel was restricted. We're now seeing those conversions happening as well, and we've had a strong quarter with about 75 crores of land lease revenue in our IC and IC business. So if I take that combination of 300 crores of pre-sales in residential and 75 crores of land lease revenue in IC and IC, that's the run rate we need to be on to meet our goals for the immediate quarters and going into the next year. So I'm happy that we are starting to hit that kind of required run rate. We do have some catch up to do because Q1 was lower than those numbers, but I'm very confident as I look ahead to Q3 and Q4 that we will catch up with that run rate. Let me turn over to Vimal to summarize our financial highlights for the quarter.
Yeah, thank you, Ravi, and good morning, everyone. I'll just mention few aspects related to financial performance for Q2FY22 versus Q1FY22, and all these numbers are as per India's accounting. The consolidated total income stood at 65.7 crores as against 154 crores in Q1FY22. The consolidated EBITDA, including other income and share of profit from JV, stood at 31 crores as against negative of 16.8 crores in Q1FY22. The consolidated PAT after non-controlling interest stood at 6.5 crore as against loss of 13.9 crores in Q1FY22. Your company has consolidated gross debt of 266 crores while cash in hand and bank balance is 250 crores. The cost of debt stood at 6.7% on consolidated basis, while standalone cost of debt for MLDL stood at 5.7%. I'll now request if we can open the lines for participants for further interaction. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wants to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star followed by 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Chattopadhyay from ICICI Securities. Please go ahead.
Yeah. Good morning, everyone. Thanks for the opportunity. First of all, I have to congratulate management finally getting on track for the land bank addition. First question, just if you could help us understand this new project in Dahisar. Is it what is the nature of this land? Is it a society redevelopment? Is it a stuck project where you have taken up the balance portion from another developer, or is it a brand new land parcel? And by when do you expect this project coming to the market in terms of launch? And second question I have is, obviously you alluded to the pipeline, so if you could throw some more color that within this year, how many more deals we could expect to announce across markets? Yeah, thanks.
Sure, thanks Aditya. This is an outright fresh land parcel. It is not a distressed asset or a society redevelopment. It's about just under 5 acres. Very well located, and as I mentioned, will give us about 5 lakh square feet of carpet area for sale. Going forward, we are well on track to achieve that 2,000 crores of GDV accretion from new land sales within this financial year. Fingers crossed, if everything falls in place, we should be slightly higher than that.
Okay. And so this Dahisar project, is there any GDV or any gross sale value sort of number you have in mind you'd like to share with us?
So it will be about 1,000 crores. 5 lakh square feet. That market is at about 20,000 on carpet. So it will be about 1,000 crores.
And launch in a year's time, or looking something?
In a year's time, yeah. In FY23 we should be able to launch that.
Okay. Okay. And next question is just on the IC business. So you said the 75 crores of run rate is something you'd like to maintain over the coming quarters. Do you see any upside risk to these numbers? Or I'm saying, are you being conservative when you're saying this, or is it something which we more or less see that we can achieve consistently?
Well, hopefully upside is not a risk, it's an opportunity. But yes, look, I want to be a bit cautious because, as I said, we had seen the pipeline building up, the inquiries building up in the previous quarters, but this is a lumpy business with long sales cycles. And therefore, becomes a little hard to predict a quarter-on-quarter performance. But I am seeing, as I mentioned, a strong pipeline of very advanced conversations for Q3 and Q4. So I'm cautiously optimistic that we'll be at or better than that run rate.
Okay, that's great to hear. Yeah, thanks. I'll come back in the queue if I have more questions. Yeah, thanks.
Thanks, sir.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, Arvind. Good morning. First of all, I'd like to congratulate you on this transaction. So do we assume that this is a turning point, a big turning point for the company now, so that overhang of Mahindra Life being very conservative, laid-back kind of a company now with this transaction? Maybe I think this is one of the largest transactions in the history of the company. From here on, it looks like to be a turning point. So will you allude to that?
Look, I don't know. I mean, turning point is a bit dramatic, but we have been building up towards this on multiple fronts over the last year or so. It's not just about doing the transaction, it's also about having that platform to deliver the project well, to sell well in a launch. So all of those capabilities, backpropping new land acquisition with confidence that you can bring it to market in a timely manner with great launch success and then deliver it within a time frame that you've promised is equally important. And we've been investing over the last couple of years in building those fulfillment and operational capabilities. So I think with every passing quarter, we are getting more confidence. With every launch that we are doing, we are getting more confidence that we can step up to the plate. If you look at some of our recent launches, it's an endorsement that the thought process and strategy that we have on the residential business about a product-led strategy seems to be working. Customers are responding well to that. So that's giving us confidence. We are beefing up our construction capability. We are beefing up our design capability. So all of that kind of sits together.
Okay. So second question is on, you touched upon that you're looking at two types of transactions in an advanced negotiation. So one is the outright, other is a society redevelopment project. So put together the GDVs of these two funnels will be roughly about 5,000 crores?
Sorry, how much?
5,000 crores.
No. These two transactions alone won't be 5,000 crores. As I said, we will typically look at individual projects with GDVs in the range of between 500 to 1,400, 1,500 crores. And the high probability or the advanced pipeline today is sitting at about 3,000 crores. It will convert over the next 6 to 9 months.
Oh, okay. And beyond that, how's the prospective pipeline looking at? So first of all, I would like to understand how big is your BD team, how does the deal origination happen here? So are you present in larger deals which other peers are announcing? So do you get an opportunity to present yourself there? So how do you chase these deals? And how is the overall prospect pipeline looking beyond this advanced pipeline which you talked about 3,000 crores?
Yeah, so increasingly we are getting pulled into the market flow of deals. We are competing head to head with all the leading developers on a couple of deals. So that's kind of good that we are seeing the flow and we are being invited into that. We are getting noticed from the supply perspective. But there are several kind of off-market transactions as well, which come to us in preference to others, either because of people we know or they want to work with brands like Mahindra. So there's both kinds of deals. And the sourcing happens through all the classical channels, which is the IPCs, the local land brokers, etc. We have, as I had mentioned earlier, we've chosen to focus on two cities, Mumbai and Pune, and even within those are now starting to prioritize some micro markets that we would like to definitely establish a presence in or deepen our presence in. So again, we've oriented our team towards those micro markets and starting to scout proactively for deals in those.
Okay. So just lastly, beyond MMR and Pune, is there anything which you're working around in southern markets now? Because that market is doing well. You have a launch which is coming up. So beyond that, you have to start planning from your project maybe 1 year down the line after the Kanakpura launch. So are you looking at any opportunities or seeking any opportunities in the Bangalore market?
Not immediately. What we'd like to do in Bangalore is maintain that beachhead. So Kanakpura will take us through for the next couple of years. We want to get deeper into Bombay and Pune over the next 2 years. And as we do that, we will certainly start expanding our presence in Bangalore as well. We don't want to vacate that market. We do think it will be the third market that we would want to grow in. But the goals that I had shared in some of our earlier calls of getting to 2,500 crores of sales and 500 crores of industrial leasing by 2025. We think we need to make substantial progress towards that in Mumbai and Pune over the next 2 to 3 years before we then open up the third market, which, as I said, is almost certainly going to be Bangalore.
Okay. So just the last of my squeeze in. So beyond the 3,000 of the advanced pipeline, so what are the other MOUs which we have in place which may crystallize over the next 2 to 3 years depending on the CPs?
Sorry, what are the other?
MOUs which we may have in place, which may be fructifying over the next 2 years depending on the CP which the owner has to meet or the developer will have to meet to reach the launch stage.
I mean, there is a reasonable pipeline. I won't put a number on it, but as I said, 3,000 crores is the advanced pipeline. There will be at least twice that value in various stages of discussion, early to kind of mature stages of discussion. But those are probably beyond the 6 to 9 month time frame that we see those closing.
Yeah, so any value on that, or will you not be able to give any sense?
Too early to put a value because
okay.
Some of these constructs are also evolving. How much of it we will do as outright, how much will be joint development, etc. So too early to pin a value on this.
Okay, Arvind, thank you. That's all from my side.
Thanks.
Thank you. The next question is from the line of Manish Agarwal from JM Financial. Please go ahead.
Yeah, hi, good morning. So my first question is pertaining to the debt figures, QOQ. So the debt in the residential business has gone down by around 100 crores, while in the industrial business has gone up slightly by 30 crores. So what exactly is happening? Has the cash from Ashiana business come in, Ashiana deal come in?
No, so Manish, I'll request you to look at it at a total sector level. These are cash upstreaming or downstreaming, which we optimize the overall fund utilization. From that perspective, you may see the position again reversing in the next quarter to the extent of the numbers you have just mentioned.
Okay. And Ashiana cash has come in?
Majority of it has come in. The balance will come in within October itself over the next 1 week or so, and that will be used to retire some of the debt in that entity.
Okay. And what was the price at which the deal happened?
Sorry?
The price of the deal?
We can't share commercials of specific.
Okay, sure. And the second question is regarding the collections. So over the past 4 quarters, collections have been declining QOQ. So any particular reason, or is just in line with the construction cycle?
The construction has been extremely strong per se. If you look at the aging of the outstanding, most of the amounts or the monies are in not due buckets, and that is the only reason you are seeing the cash collected being low. In terms of quality of receivables, it's probably one of the best, and as Arvind mentioned, is probably one more indicator about industry revival per se. And you will see very, very strong numbers in quarter 3 so far as collection is concerned.
Sure.
Yeah, look, I think one of the factors to kind of keep in mind when you look at the collection numbers is the Luminaire OC came in early September, and that has a large collectible there. So much of that collection will happen in this quarter.
Understood. And lastly, on the Ahmedabad activation plan, so when exactly are we looking to do, and what sort of pipeline do we have in the industrial park over there?
So Ahmedabad, we are now actively in the market. Whenever you seed a new industrial park, it's really important that you get the right target market and the right profile of the anchor client. So while there are several people who are willing to do small transactions there, etc., we are being a bit cautious because we want to position the park in a certain way and want the right kind of anchor to be able to position that. Like in every such development, and if I were to take an example from a completely different asset class, which is retail, when you start a mall, you will want the right anchor tenants there, and not just sell small shops to or lease small shops to multiple people. So that's the stage we are at. We are hoping within this financial year we will have that fructification. But we don't want to be desperate and do business which doesn't set the park up well for the next 5 years needs to stand on the shoulders of what we do this year.
Sure. Thank you. That's all from my side.
Thank you. The next question is from the line of Nikunj Baheti from Quest Investment Advisors. Please go ahead.
Hello. Thank you, sir, for the opportunity. I have a couple of questions. Firstly, we are looking at a revenue pre-sales number of 2,500 crore from 695 crore as of FY21. So I believe new launches and completions would be the key metrics one has to track. I understand you previously touched upon the same, but can you highlight the initiatives we are going to take and are taking on the same front? And can you also quantify the same in terms of annual run rate we are likely to see going forward?
Yeah, look, I won't give year-on-year targets for that sales, but as you rightly pointed out, 695 in 2021, 2,500 in 2025. So one could interpolate between those numbers and kind of that's roughly the trajectory we need to be on. And as you rightly pointed out, it will require new land parcels, new launches, new phases of existing projects, all to be activated in with a regular rhythm to it. And I had mentioned that in H2 this year, to start with, we have at least 3 or 4 important launches lined up. We are, fully prepared, have done our homework, and hopefully will see the same success that we've seen in recent launches.
So, my question was more towards the kind of investment we are making to build that potential to scale up to that level. So, I understand we are making new launches and adding to our land bank, but what are the initiatives which one has to actually undergo to actually have that kind of scale, and what are the key challenges to actually meet that scale? If you can talk on that.
Sure. So one, there's kind of financial investments, and then there are capability or people development that one needs to do, which is not just quantifiable in money terms. So on the financial side, as we had laid out earlier, we have to add about 2,000 crores of GDV worth of projects year on year. It will require us to spend anywhere up to 500 crores per annum on land purchases, and this is assuming much of it is outright. So if you do JDAs, that investment will be lower to that extent. But let's say 500 crores per annum of land investments from a financial capability standpoint. On the people capability, a lot of work has been happening, as I mentioned earlier on the call, in terms of building our marketing insight. We see on residential, we are very clear that we want to be leading with differentiated products with very strong product-led strategy. For that, we have a very clear path and investment plan and capability building around consumer insight, product design, and go-to-market, which is led by Viral and Jitesh from marketing and design respectively. Back that up then with what we are doing on the sales side. We've built out a very strong distribution platform. Over the past 18 months, the number of active distributors with us, which is our channel partner base, has grown almost 8 to 10-fold. And this is not just about empaneling our channel partners, it's about then working with them, getting them excited about doing business with us, engaging with them. We have a digital app with which we keep them informed on collateral new launch. They're able to track their brokerage payments through that app. The status of their leads, what is getting converted, what is not. Look, best in class from an industry perspective, what we've developed in terms of engaging with our distribution base. But equally, it's not just about distribution. It's about building out loyalty sales. It's about building out digital and pre-sales. So all of those over the past 18 to 24 months has seen step changes in terms of our IT capabilities, people capabilities, and process capabilities.
Thank you, sir. That was really great insight. My second question and last question is on the marketing strategy again. So we see that when the project is launched, especially in case of affordable project, there is initially a very good demand, but towards the end of the project, we see some fading of the demand. So how are we going to tackle the same, and what are the strategies we are building, if you can share on the same?
Yeah, that's a good question, and honestly, I mean, it's very hard to have a standard answer to that. Our approach has been we want a very strong high volume launch. We want to be able to sell 60% plus at the launch itself. That sets you up very well for the rest of the life cycle of the project, because then pretty much you become, from a financial perspective, cash flow positive, net cash positive by year 2. Once you have that cushion, it allows you to then play the rest of the life cycle either with an inventory-led story where certain kinds of inventory is held back and brought later for future activations, or with other tactical campaigns that one could do. And we've tried different things in different locations depending on what works for that particular location. So what we did in Happiness Kalyan, which was launched in 2019, was very different from what we did, for example, in Kathavde, which was launched in March this year, February or March this year. We will, as I said, there's no one-size-fits-all answer. We will try different things and see how to manage that tail inventory that you rightly pointed out. Often becomes a challenge to address. So far, touch wood, we've had reasonable success in managing that product life cycle.
Thank you, sir. Last question, if I may. So you mentioned that the Dahisar land is likely to add 1,000 crores of GDV, if I'm not wrong. So can you also mention what is the construction cost which this project is likely to incur? That's it from my side. Thank you.
Yeah, we'll not be able to share the specifics on this one, and the product itself will either get developed as mid-premium or maybe slightly above or lower than that, and construction cost will be really dependent on what we finally decide at the time of going to market.
Yeah, but roughly, I think in a market like that, one should assume that land and approvals is about 30 to 35% of the GDV. Construction cost is another 30 to 35%, I would say.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The next question is from the line of Rohit from Samatva Investments. Please go ahead.
Yeah. Hi, sir. Good morning. Thank you for the opportunity. My first question pertains to the Thane land bank. I just want to know if you could provide some numbers regarding, what is the potential GDV from the project and what kind of project we're going to do there, whether it will be the affordable housing or the mid-market segment. Any details on that part?
Yeah, so Thane, we are still working through different end-use scenarios on that. There are different policy environments under which we can develop that particular project. It's a very large land parcel, so there are some overall kind of, whether it's the integrated township policy or other kinds of policies that exist. So it's a bit early to assess, therefore, what the GDV value is going to be, because it will depend on the mix between different asset classes that we eventually end up with there. I think we'll be in a better position to firm up our thoughts by end of this financial year or first quarter of next financial year.
Okay, sir. My second question, I know it's a bit early, but I would just want to understand the redevelopment projects in Mumbai, because many of our competitors are going very aggressively on the redevelopment part. How big can this project this segment be for the company in the next 3 to 4 years down the line?
Look, I think it can be very big, and particularly in Mumbai, if one were to think about it, there are two sources of land. It's either industrial land that has to get repurposed for residential, or it is societies that have to get redeveloped. Or the third is, of course, slum redevelopment. We are currently kind of not keen to do slum redevelopment. We don't understand that space well enough. But society redevelopment as well as industrial to residential kind of land conversion, we are active in both those spaces. I think both of these are going to be very large. We are, as I mentioned at the start of the call, as part of our advanced land pipeline, we do have a couple of society redevelopment transactions. Likely the first few transactions we will do it along with a local developer who understands how to manage societies, tenants, things like that, because those are things we've not done before and it is a very specific capability. So we'll work in partnership with the local developer in the initial few society redevelopments that we do.
Okay, great, sir. Thank you so much and wishing you all the best. Thank you.
Thank you very much.
Thank you. The next question is from the line of Ronald Fioli from Shefan. Please go ahead.
Yeah, good morning, sir, and congratulations on good sales numbers and collections. My first question would be that after 7 quarters you have reported operating profit. So, was there any one-off item in showing this operating profit during the quarter?
No, there wasn't. It's this time it's purely operations. There's been no one-off items at all.
Okay. Because earlier that was in the mind that because of higher fixed costs, the operating loss would continue for a few more quarters before turning operationally profitable. So we can expect operational profitability to continue from here on, or there can be times when it can result to operating loss booking.
Yeah, look, a lot of that will depend on how the IC and IC business shapes up. The IC and IC business, as you know, revenue recognition happens immediately, and therefore, and it's a high contribution business. So, if based on what I spoke about earlier, if that demand trend and fructification of demand into actual leases continues to strengthen quarter on quarter, then we will see good profitability. With the residential business, it tends to be a bit lumpy because it's on completion of contract method. So quarters in which we have OCs coming in significantly will have revenue recognition and profit recognition. In other quarters, it will be lower. So it will depend a little bit between these two businesses and how that performs.
Okay. Second question would be like right now we are seeing a lot of inflation coming up, in steel, cement, and this would be continuing for at least another 6 months. And if this kind of inflationary environment continues, and suddenly if post say 1 year the interest rates start to inch up, then do you see that this thing will concern you over the longer term, say not today or in a 1 year's time, but maybe 2 to 3 years down the line, that residential demand might see some dampening purely because of inflationary and inching up of interest rates?
Yeah, look, I think the cost is real and it's definitely pinching. When we put it together, we are seeing with all the commodities, steel, cement, copper, plastics, all being at all-time high. We are seeing roughly a 3% margin impact if we put all those impacts together. Now that 3% margin impact can be defrayed in multiple ways, which is what we're doing. One is we're going back to the drawing board and sharpening our value engineering and design efficiencies and trying to get, let's say, a percentage out of that. We are systematically taking price increases, and this is something that we were doing even before these cost inflations hit us. I've spoken about this in the past, where we want to have a discipline where every quarter we take prices up by small amounts, 1.5%, 2% quarter on quarter, because I think that builds confidence in the buyers also that the value of their property is growing. And the third is to look at sourcing efficiencies. Can we consolidate our buying? Can we negotiate smarter, etc. And finally, the fourth, which I think is unique for us and players like us, is a cost of capital advantage, right? We have almost a 300-400 basis points cost of debt advantage compared to many of the other developers in the market. So we should be able to turn that into an advantage from a cost perspective. So if we put these four together, yes, cost inflation will of course continue to be a concern. Nobody wants costs to be out of control. But I do think there are enough tools in our toolkit to be able to address that.
But I was more talking about the industry demand. Can it dampen the demand, this kind of scenario over the post 2 years?
I don't think so. I don't think the demand is that price elastic that 1-2%, even if and many developers have been talking about taking prices up by 2 or 3 percentage points. We've not seen a reduction in demand in our own portfolio. We take projects that we've done good launches and we've taken prices up by 6 to 10% after the launch, and we've still seen a steady increase in demand. So I think with a category like real estate, customers are making a long-term commitment. I don't think a 1 or 2% swing in pricing is going to throw them off.
And my last question would be, during last year also we have seen energy launches, increasing. So has there been any changes in the time period in getting the approvals? Whether this situation of getting, approvals used to take a much longer time period earlier, and launches were few. But suddenly, we see slew of launches in the industry. So not only to the company level, is it there is a general decline in time period to get approvals and then bringing the project to the market earlier than before it used to be? And is it specifically related to a region specific thing like Mumbai or Pune, or is it across India?
Yeah, look, I think this needs to be viewed along with the various development rule changes that have happened. So with DCPR in Mumbai, with the unified DCR in Pune and Mumbai suburbs, etc., there's been a lot more codification of what is possible, what is not, which has reduced the ambiguity and discretion which used to cause delays earlier. So I think that has contributed strongly to, let me say, there's more predictability in approvals. Whether it is faster or slower, in most cases it is starting to move faster, but I'm still not confident enough to say across the board it has become faster.
Oh, okay. Yeah. Thank you very much, sir, and best of luck.
Thank you. The next question from the line of Anish Jobalia from Banyan Capital Advisors. Please go ahead.
Yeah, hi Arvind and team. Good morning, and thank you for the opportunity to speak on this platform. So I have the following questions. You mentioned in your opening remarks about some of the projects that you will be launching in H2. Would it be possible for you to pencil that out into in terms of square feet? What are you expecting?
I don't know the numbers offhand, but Sumit or Vimal, would you have that?
So, Anish, I think as Arvind said, we are talking about Luminaire project, which is a single tower. So that entire tower is expected to be launched this quarter. In Kanakpura, we are talking about a 7.5 lakh square foot of total project area. We would open up a couple of towers in that complex, in that entire project. Not everything will come up together. As the phase 1 gets good response, the next phases will get launched the way we have done in Tathawade or Chennai. In addition to this, we are also talking about opening some additional phases in Tathawade, Alcove, and other projects that we have launched earlier this year, including the Chennai one, which we have recently launched. Given that it has got almost 85% sold out,
right.
We will bring in the additional inventory there. So overall, we are looking at probably more than a million square foot of inventory being added or opened up for sales in H2.
So I think there's a slide in the investor presentation. If you look at page 19, it has the area for each of the forthcoming projects. Now, keep in mind, as Sumit said, that not all of it will be brought to market together. So some of these will be phase-wise launches.
Sure. Thanks for that response. And second question is, what would be the contribution to our this quarter sales from completed projects?
I think we have a very limited inventory, Anish, in terms of completed sales. The inventory that we have is largely luminaire project which got OC'd in the month of September. So I think we are seeing a very strong demand in that particular project. We are hopeful of probably bulk of the inventory in luminaire should get sold during this quarter. So overall value of the inventory that we have is about excluding luminaire would be about 25-30 crores.
Yeah.
Luminaire is the bulk of the inventory there.
So would it be possible to break up your this 0.39 million square foot of sales between some of your important projects? I mean, I know that around 14 lakh square feet in Chennai, but others, if you can understand, that would be helpful.
Sorry, I could not follow the question, Anish.
No, my question is the follow-up question is to understand this better. Would it be possible for you to break up your 0.39 your sales into numbers between your major projects that got sold in this quarter, just to understand what has moved better versus.
We have mentioned that in our investor presentation in one of the slides, project by project sales value. I mean the PTD sales value. So if you were to look at the last quarter, what was the total volume, and look at the volume today, the differential will give you the value during the quarter.
Okay, and could you provide some texture around how we were able to lead such significant sales conversion at the MWCC project? Would be helpful to know this strategy and overall what has changed for us going forward.
Look, blessings of the Almighty and hard work. It's always the combination of the two. As I said, we spend a lot of time before every launch on getting the product right. So this was another example where the marketing team did a lot of research to understand what's the right product for that particular micro market, how to position it, what features it needs to have, etc. And then that was backed up by a very strong sales performance. Again, activating the distribution in the Chennai market. Chennai is a less distribution heavy market compared to Mumbai, but despite that, we were able to get almost, I think it was 60% plus of our sales through distribution. Mahindra World City Chennai is also a market where we enjoy very strong loyalty sales and corporate sales because of corporates present in Mahindra World City. So those two verticals also contributed strongly.
Okay, sir, and thank you for your time and all the very best for the.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Arvind Subramanian for closing comments.
Thank you, Margaret. So, look, as I said, we are building up steadily and strongly, and that's the most important from my perspective, that there is no flash in the pan kind of performance. If we look at our run rate for the quarter gone by, just to reiterate the point I made, 300 crores of sales on residential, 75 crores of leasing on the IC and IC business is the run rate we need to be at for the immediate quarters, so that we can build towards those 2025 goals of 2,500 crores and 500 crores. I am seeing strong demand both in terms of depth as well as breadth in the residential business over the next several quarters. I don't think this is a short-term phenomenon. And on the industrial business, because of the reasons I mentioned in my opening comments, structurally, I think there will be a phase of gross capital formation and manufacturing investment in the country. And Mahindra World City and Origins, our assets, are best positioned. They're among the leading destinations for manufacturing in those particular markets. So I think the next couple of years hold a lot of promise for us. We are candidly a small business. We have a lot to do ahead of us, but we are building well towards that. Thank you again, everyone, for joining the call, and look forward to staying in touch. And wish everyone a very, very happy Diwali and a festive season. I do hope the next year is far, far better than the last year has been for all of us at a personal level, at a professional level, and for the country as a whole. Thank you again.
Thank you. On behalf of Mahindra Lifespace Developers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.